right, good afternoon, folks. This is Ferris with Trade with Tex, and today we're going to be talking about how to avoid getting caught in bear traps and bull traps. So basically, point of this webinar is to show you when you should be going against the trend and when you shouldn't be. Also, this should help you with confirmation, right? If you find yourself getting faked out a lot, you get in at the wrong time and then it goes the opposite direction, this should help drastically. Okay, now, before we get started, I want to mention this was requested a lot on Twitter. Remember, you guys can always reach out on Twitter to, go over charts, talk shop, basically bounce investment ideas around. My Twitter handle is Trade with Tex. I know, pretty complicated, just the YouTube handle. If you're not subscribed to the YouTube channel, go ahead and subscribe. You can share this video with whoever you want. And if you want to try out a free week in Trade with Tex, we do offer that. You get the chat room, audio, screen share, all that good stuff for a free week. All right, but let's get into it. So first things first, I do have the NASDAQ chart pulled up here. This is universal. This applies to penny stocks, large caps, basically everything, right? And the reason I have futures up is because the NASDAQ futures today were a little bit more liquid, but it works the same way if we were charting SPY, QQQ, same exact thing. Okay, this is just the chart that I'm more comfortable with. Now, you're going to need a couple of tools here in order to spot the bear traps and spot the bull traps. Before I pull them up and just kind of point them out to you, I wanted to mention that the point of this is not only to keep you on the right side of the trade, but to avoid this. Basically, this is a really good example today. We saw it almost every day this week, though, where we had a pullback off the highs, right? So NASDAQ's already up at this point, 0.5% on the day, runs up another 0.5%. We're overextended, right? So everybody and their mother is watching the short side. And as you can see, this first pullback, pretty clean short signal, right? Wrong. A lot of people think that, but in reality, we have not gotten confirmation at that point, and you have to be waiting for a better trade setup. Now, the time frame that we're going to be using is the 15-minute, right? So we're in Thinkorswim here. We got the 15-minute time frame up. Doesn't matter what the interval is as long as you're looking at 15-minute candles. Okay, so I got mine set right here. Good to go. All right. Now, the other tool that you're going to need is the 8 exponential moving average. So if you don't have this on your chart, it's that purple line that I have here, pink, purple, call it what you want. Go to Edit Studies. I'll do that again a little bit slower. Studies, Edit Study. All right. Type in exponential. Just do expo and it'll pop up, right? Moving average exponential. Double click it. That'll add it to the list here. And then all you got to do after that is go into it by clicking this little settings cog. All right. And again, if this is too fast, you can just scroll on back or slow down the playback speed for the video. Click that little settings cog. That'll take you to this page here. Lower the length of the moving average to 8. It works similarly for the 9. The 8 is just what I use. It's a Fibonacci number. Works a lot better for me. Okay, so change the length to 8, change the color, width, whatever else you want to do. Basically, the point of this moving average, the exponential part makes it more reactive, right? So if price starts moving up quickly or moving down quickly, this moving average will trail it a lot closer, gives us a better idea of the price action and the trend. Okay. That's the whole point of a lower length moving average that is exponential. So I got mine set to 8 here. Again, I have it in pink. And now that I have that on the chart, we can actually get into the details, the fun stuff. So basically, the trick here, and there are a couple of tricks, but the big one is that after we get a big run up like this, when we get the first significant pullback, right? And it works the same way on the other side. If we were to inverse this chart, get a little bit fancy. Let's say that we were dropping down really aggressively, right? Markets are red, and we get that first green candle. That's when buyers typically step in, or sellers, depending on which side of the trade we're playing, right? So in this case this morning for the NASDAQ, everything looked good for a short. We were already up a lot. We were overextended. Everybody was looking for it. So we got that big 15-minute drop. That's the first sell signal. However, we need 2 candles to confirm. Okay, so that's the first part of this. We need a lower low and a lower close on the next 15-minute candle. So after this point, next one needs to be red and at least to a lower low. It doesn't have to be a huge dump back down, right? But it does have to be red, okay? Now, this is where the trap comes in. Notice that we got a green candle here. Still a slightly bearish chart because we pulled off the high with that previous one. Everybody and their mother is still short, right? If you haven't seen this webinar, then you are still short and you're probably screwed in a matter of 30, 45 minutes. It's just a ticking time bomb. Reason being is what the closing prices are showing us by this candle closing green, even though it's a bearish candle, because we have this big upper shadow. Oh, sorry, I bumped my keyboard there. We have this big upper shadow here. Basically, that is still a slightly bearish chart, but the close higher is telling us that bulls are trying to take back control. Now, fast forward, everybody is still in the short from this candle. We close another green 15-minute candle, okay? Fast forward again, we close a red one, but notice something significant here. The lowest closing price from this candle is right here. And this close still not below. So it might look like it's confirming. It is not. We are still not closing below this low. So the first part of the trick that I wanted to point out is that this right here, this lower close is bearish, but unless we close lower moving forward, this chart is not bearish at all, okay? What normally happens, and it's almost a textbook setup every time, what normally happens is that these algos will bait in everybody with 15, 30, 45 minutes of action that looks like you're winning, but you're not, right? Because we're technically not closing lower, so that keeps you in the trade, right? Now, if we fast forward this, and we can just zoom out and zoom back in, you can see what happened shortly after, right? There's the bait. This right here is not confirming, not confirming, not confirming, not confirming, because we are not closing below that first red 15-minute candle low, and then we shoot up. 99% of the time that this starts happening, the 8 EMA is going to support it. We will never close. Like, let's say, for example, we close like 2 points lower, right? Like $2 lower, just below this low, and we're not sure if it's setting up short. If the 8 EMA is still intact, you are going to get smacked around, right? See how we have this candle positively reacting to the 8 EMA. We closed above it. This one doing the same thing. This one doing the same thing. It's only a matter of time before they spike it. The spike might not hold, but this right here is a perfect example of a bear trap, right? I'm a bear. I went on the short side. I did not listen to the chart. Bam. I get absolutely hammered. Okay? Now, let's look at another example from this week, because again, this has been happening a lot lately. Yesterday's movement was really choppy. This is a pretty good example here, using I think this was Tuesday's movement. Okay? See how we had right here on the pullback a lower close, but not a significantly lower close, right? See right here how we had a lower close, but not a lower close after that point, right? Just candle to candle. So we can go through these one by one. I shouldn't generalize that. There's the first sell signal, no follow through, right? Because we did not close lower on that candle, so we cannot assume that we're gonna get the big drop off. Here's the first sign that we're losing steam, but volume is low. We're barely closing lower. That is not a reassuring sell signal. And see how this kept happening, right? A couple of times here where we had a pullback, but not a significant one. Pullback, but not a significant one. Look at what supported the move every time. 8 EMA. This time we didn't even test it, so that wasn't even that hard of a pullback. 8 EMA. So this is 1 bear trap, 2 bear trap, 3 bear trap, 4 even out here, right? All the way up until the closing bell. And those are the days where you really post a big loss. So bottom line, guys, if you use the 15-minute, make sure that we have 2 consecutive red or green, if we're playing the other side, 15-minute candles, right? That's the absolute confirmation of a reversal, and that 8 EMA has to crack if you're unsure about it, right? The 8 EMA is kind of insurance, right? If you're not sure, if it's not a hard pullback, wait for the test of the 8 EMA. This will keep you out of all of the traps. I'm not even exaggerating, all of them, okay? And it will also help you capitalize on the other side. Like, for example, today, if we can spot this in advance, we can make money on it. Simple as that, right? We don't have to play the short side. If we can spot that bear trap, it's gonna shoot right up and we can take advantage of that. Okay? So plain and simple, you gotta use a 15-minute time frame, 8 EMA, and again, you need consecutive candles. Works the same way on the other side, and this is universal for any stock. Okay? So if you guys got any questions, let me know. If you learned something through this webinar, be sure to share it with other people. More importantly, subscribe to the channel, and if you want, try a free week in Trade with Tex. We'd be happy to have you. All right? But good luck avoiding those bull and bear traps. Hopefully, you guys can bank off of this. All right? Have a good one, folks.